Hey there, welcome to the next 500 day. You've probably heard that building wealth takes thousands of dollars, multiple income streams, or a big inheritance. But what if I told you that financial freedom can actually start with just $100 a month? In today's video, we're exploring how small, consistent investments can lead to big financial results over time. Whether you're a student, a side hustler, or someone living on a tight budget, this video is for you. Stick around till the end, because I'll share a bonus technique that will show you how to double the power of that $100 using automation and compound interest. So hit that like button, subscribe to the next 500 day. Let's dive in. 1. Understanding the power of compound interest. One of the most powerful concepts in finance is compound interest. It's essentially the process of earning interest on your initial investment as well as the interest that's been added over time. Starting with $100 a month may seem like a modest amount, but the earlier you begin, the more time your money has to grow exponentially. For example, if you invest $100 a month in an index fund with an average annual return of 7%, after 30 years, you could accumulate over $100,000. The key here is consistency. 2. Invest in low-cost index funds or ETFs. When you're working with a limited budget, it's essential to focus on investments that offer the best returns with the lowest costs. Low-cost index funds or exchange-traded funds, ETFs, are perfect for small investors because they track the performance of entire market indexes, like the S&P 500, giving you exposure to a diverse range of companies. With an ETF, you can invest in hundreds of stocks at once, spreading your risk while minimizing fees. Over time, these funds have historically outperformed many actively managed funds, making them a great choice for long-term wealth building. 3. Automate your investments. One of the easiest ways to ensure that you are consistently contributing to your financial freedom is by automating your investments. Setting up an automatic transfer from your checking account to your investment account every month ensures that you stay disciplined and consistent. Even if you're investing only $100, the consistency of monthly contributions can lead to significant growth over time. This automated approach takes the emotion out of investing and prevents the temptation to spend the money elsewhere. 4. Consider dividend stocks for passive income. If you're looking to build wealth with $100 a month, dividend stocks can be a great way to generate passive income. These stocks pay out regular dividends, which you can reinvest to buy more shares or use as additional income. By investing in high-quality, dividend-paying stocks, you can generate a consistent stream of income while also benefiting from long-term capital appreciation. Even with small investments, reinvesting dividends can significantly accelerate your growth over time. Over the years, this passive income can help you reach financial freedom more quickly. 5. Leverage tax-advantaged accounts. Investing in tax-advantaged accounts like Roth IRAs or 401ks can make a significant difference when building wealth with $100 a month. These accounts allow your investments to grow tax-free or tax-deferred, which means more of your money stays invested and continues to compound. A Roth IRA, for example, allows you to invest after tax dollars, and your withdrawals in retirement are tax-free. By using these accounts, you can maximize your returns and minimize your tax burden. 6. Embrace the power of dollar cost averaging. Dollar cost averaging, DCA, is a strategy that involves investing a fixed amount of money on a regular schedule, regardless of the market's ups and downs. This strategy works especially well when you're investing small amounts like $100 a month. Rather than trying to time the market, DCA allows you to invest consistently over time, potentially buying more shares when prices are low and fewer when prices are high. Over the long run, this can reduce the impact of market volatility on your portfolio and lower the average cost of your investments. 7. Invest in real estate through REITs. Real estate has historically been one of the best ways to build wealth, but purchasing property outright may be beyond your reach with just $100 a month. However, real estate investment trusts, REITs, offer a way to invest in real estate without the need to own property. REITs pool money from multiple investors to purchase and manage real estate properties, and they typically pay out dividends to their shareholders. By investing in REITs, you can benefit from the appreciation of real estate and the income generated from rental properties, without the hassle of managing the property yourself. Many REITs are available for as little as $100, making them an accessible way to add real estate exposure to your portfolio. 8. Build an emergency fund alongside investments. Even when you're focused on building wealth, it's important not to neglect building an emergency fund. While $100 a month may not seem like much for an emergency fund, it's essential to have a financial cushion to avoid having to liquidate your investments in times of crisis. A good rule of thumb is to aim for 3 to 6 months of living expenses. By allocating a portion of your monthly budget to building an emergency fund alongside your investments, you ensure that your portfolio remains intact during unexpected events, such as a job loss or medical emergency. 9. Seek out low-cost investing platforms. When you're investing small amounts like $100 a month, it's essential to minimize fees. The higher the fees, the more they eat into your returns over time. Many investing platforms offer low-cost or even free investment options, making them ideal for small investors. Robo-advisors, for example, offer automated portfolio management for a small fee, while many brokerage accounts now offer commission-free trades. By using these low-cost platforms, you ensure that as much of your $100 as possible goes toward growing your portfolio. 10. Stay consistent and patient. Building wealth with $100 a month requires patience. The key to success is consistency and a long-term perspective. While you may not see large returns in the first few years, the magic happens over time as your investments compound and grow. Staying committed to your monthly contributions, even when the market is volatile or when life gets in the way, is critical to reaching your financial freedom goal. By making your $100 investment a priority each month, no matter the economic conditions, you ensure that you're always moving closer to financial independence. Bonus. The 2x rule. Automate and accelerate. Here's your bonus strategy, and it's a game changer. I call it the 2x rule. First, automate your $100 monthly contribution into a diversified index fund or a robo-advisor that grows over time. Then every 6 months, try to increase that amount by even $10 or $20. That's the acceleration. But here's the secret sauce. Reinvest all gains and dividends back into your portfolio without touching them. This combo of automation and small increases creates a snowball effect. Over the years, you'll build momentum, and that original $100 will be working harder than ever. It's not about how much you start with, it's about how committed you stay. Thanks for watching the next 500 Day. If you ever felt like financial freedom was out of reach because of a small income, now you know that $100 a month can be more powerful than you think. Want to earn $10,000 a month without showing your face? Click the link and start your faceless YouTube journey today. If this video inspired you, make sure to hit that like button, subscribe to the channel, and share it with someone who needs that extra push to start their journey. We've got more videos coming your way on saving, investing, and building wealth from the ground up. Until next time, take control of your money, $100 at a time.